Hey guys, welcome to another edition of the Crypto Lab with Alex, featured by Trading Analysis. I hope you're all well. Lots of course, things to digest after the yesterday's Fed meeting. So we are going to go over our usual macro analysis, including a little bit of technical analysis on yields in US and Europe. We're going to look for chart on oil, nat gas, also gold and silver, some of the commodities, and then of course we're going to switch to cryptos. If you like to leave some of the cryptos because this is a primarily crypto thing, you can leave a couple of cryptos that we might see after the presentation. The overall macro scene we are looking together because we are trying to figure out from where and when the next inflows in the crypto markets will start. So we need also, because still crypto markets are connected with the overall macro picture. So we try to figure out when and from where the money will come from into the next bull run that we expect, of course, on the upside, as is the bull run. So let's start. We're gonna start first with the Fed meeting yesterday. So this is the CME Fed tool, which we look occasionally to see how the market is pricing in Fed moving forward. So yesterday Fed moved 50 basis points. Market reacted first on the downside and then on the upside because Jerome Powell excluded the possibility that they will hike rates for 75 basis points on the upside in the next meeting. He was relatively, I will say, mildly dovish in a sense that we are going to see a couple of more rate hikes, but they are going to be, of course, first data driven, but secondly, they will moderate these hikes around 25 basis points, which now currently, as you can see from the last Thursday when we saw markets start to price in even 50 basis points, now we have 82.9% that in the next meeting on 15th of June, we're going to see just 25 basis points move on the upside. He also said that the economy is looking very strong. Jobs picture is looking very strong. Economy looks healthy. We had a negative GDP reading. So basically, expression that Jerome Powell used is a softish landing, whatever that is supposed to mean. Basically, he said that they will try to tame inflation without much doing damage to economy itself. So we might see Fed gradually increases the interest rates in the next couple of meetings, 25 basis points. CPI reading is moving on the upside, 8.5, I think, the last reading. So the CPI picture still moves on the upside, as you can see. All of the measurements without or exclude energy, food, and with all the components, it's moving on the upside. As we know, inflation is still ongoing affair in this current environment, which is burdened by additional Russian-Ukraine war and also by the current small COVID crisis in China, where there is an incredible amount of boats wait in front of the Chinese ports because a couple of these ports are closed. Are Fed going to actually count on the demand destruction to tame inflation, or inflation from some other reason will go down? Honestly to say, I don't see that, at least in the next couple of months. I will show you why. In most part, around 30 to 35%, either in US or in Europe, the inflation figures, of course, includes energy prices, which are moving on the upside. And as you are going to see, technically, we might have just a small pause but then I see the potentially prices of the nat gas and also potentially oil. Crude is a little bit more tricky. Move on the upside, which will actually maintain the current pressure from the energy sector on the all other sectors in regards of the inflationary picture. So let's look at the first chart. That is the US 10-year yield. So let me just glare that chart for you. So same picture from the last time. This is the monthly chart. I'm using that on a trading view. And this is the relatively big period of time. It's from 1981. We have seen a deflationary period for like 40 years. Of course, post-COVID crisis, and in the COVID crisis, inflation started to pick up due to supply chain, and then we had this energy shock from a conflict, and also with some other factors. We are moving close to 3%, as you can see, and the RSI is relatively much higher than the other readings that we have seen in this movement on the downside for these past 40 years. The big picture is will the inflation actually will be just at least to somehow a cyclical event, or we are seeing a structural change in inflationary picture. This is still to be answered, but the current trend is still secular on the downside. But this looks like a five-way move, which I think it's gonna actually portray inflation to stay a little bit longer with us. Although I do expect some type of a pullback, as I said on the last Crypto Lab. This is the monthly 200 moving average. Of course, always a very interesting point where you can see some type of a resistance. We have overshoot a bit, which is sometimes natural when you look this relation, and the RSI reading is already at 75.72. So I will allow a little bit more upside, and then I will even looking that through the Elliott wave lens, I will allow a little bit of a pullback in this region back to, let's say, 2.5 to 2. So we might see a little bit of breather in the next couple of months, which will add fuel definitely to potentially some risk on for some assets classes. If we look the same picture in the Europe, this is the same chart, so yields on the 10-year Bund, which is equivalent of the US counterpart. Same picture from 1980s, deflationary move on the downside. As we know, demographic and technology are working to produce much cheaper goods as the technology evolves, and also demographics are baby boomers are going into the pension. The workforce, at least in the Western Hemisphere, will become less and less, eventually replaced by robotics and this digital age that we are going in, and that might still maintain this current pressure on the yields on the upside. Also, I think European Union, if they want to go green, they will probably has to do another round of kind of a mix, or either through bonds or through some other instruments, a green energy revival, in a sense that they want to go out of the dependence from the Russian gas and oil, which will take, of course, a large investments over the next couple of years. I still don't see a five-way move on the upside here, so I cannot state that this will at least have an ABC pullback, which will give us a little bit more trouble in the inflationary pressures in the next year or two. In general, from the lows, we can see wave 1 and 2, maybe wave 3, 4, and 5. And then if we see a five-wave structure, we can debate regarding the pullback and a continuation, or we are going to see just a three-way move and some type of reversal. So this is left to be seen. I'm still looking this sort of 200 moving average as a viable resistance, so maybe a little bit more upside. Potentially ECB might hike for one or two times, but I don't think they can go over 1 or 1.25% from various reasons. And also, as you know, in many of these countries, the debt has skyrocketed, especially during the COVID crisis. We had a monetary and fiscal stimulus, so higher rates will be detrimental for GDP growth and also for the debt burden that many countries are having all over the world. Yeah, so let's switch to dollar index, which is still pushing higher. So we have crossed 786. I always mentioning this because I was looking for a dollar to reverse the situation with Russia and Ukraine. Changed that. And 786 was my last resort resistance level, so obviously I was wrong in looking for dollar lower. From various reasons, dollar spiked higher. It is trading even above the COVID crisis Fed swap lines, and also reaction to the 0% almost in a one meeting on the downside when the COVID struck. So we, of course, will be relatively not much sane to claim that dollar might reverse very soon. This looks relatively impulsive, and I think there is a couple of more legs on the dollar on the upside. We will see how much of this that will actually be visible on the movement. I do expect some type of a pullback and then completion of these 5 waves in the next 2022 and maybe beginning of 2023. So a couple of levels I have here. First one is 0.32, which is the usual price target. We are already there, so if we want to retrace from there, we need to start immediately some types of impulsive price action here. If we go on a smaller time frame, it doesn't look that dollar will have that reversal. It looks more like we will have some type of consolidation and then continuation on the upside, at least for some time on the upside levels, which might be from 108, 107, even to 113. So we are going to, of course, follow what is going on. Dollar is pretty much important for the world and emerging markets. The previous resistance levels are pretty high. That happened in the 1990s. It was around 120, starting from 117.15. As you can see on the chart, that was the previous level of resistance. Support, of course, stays around 77 to 80 to around this region, but we can only state that the dollar for now is bullish. And we're going to see potentially from the dollar a little bit more upside legs to complete this 5-wave structure. Switching back to oil, I was also last time, as you know, showing you this consolidation, which starts to go a little bit more on the upside now. We are trading on Brent crude at 113. Previous consolidation was here. I did, as you know, a couple of months ago, looked for some type of a flat before the war, striking this 137, 140, which we already got. Oil was somewhere around here. But I do see this potentially as a consolidation as long as we stay in this range and potentially breaking a little bit more higher. This is the environment, of course, where the energy crisis is looming, and if the European Union starts to shift sooner from Russian oil, definitely we might see higher prices, and this looks just like a consolidation. So we need to follow this, and of course a break of any break of 126, 130 will imply oil continuing higher. To switch this view, I need oil to go below this 90 level, which kind of marks this sideways previous period, which acts like a support and resistance here technically. As you can see, And for now, if I unglare this, we are just consolidating, which usually means, at least at this moment, that we are going to continue in the previous trend direction, and that basically mean on the upside. So some of these levels on the upside are, if we reach them, are going to be the biggest prices on oil in history. This is a longer term chart. If you look, and if I switch this online, we have a rather nice 5-wave move on this chart. This is a phenomenal chart which kind of depicts oil from, let's say, not beginnings, but um, until we have some data. So it goes back to 1862, 1890, beginning of 20th century. So clearly a 1-2, very nice subdivision here in 5 waves up to this 135, 147 even, which we had in 2008. So you can subdivide this very easily into a 5-wave move, into intermediary wave 3. And then we had down in a sharp fall in 2008, financial crisis. I do see this as a potential triangle with a move down in C, so that will be an A triangle, B down in C in a 4th wave, kind of a pairing this consolidation here, and this to actually hammer up the 5th wave on the upside. It needs to go above this high. We did touch it, I think, when I see this chart, but usually, or we didn't. I will have to check the levels. I don't think we gone up to 147, or let me see on the bar chart what was the highs here. So very interesting chart, in my opinion. 149, we traded here, let me just remove this, at 138, so we didn't still reach all-time high, and that is if we don't have a failed 5th, which I don't think we're going to have in this situation. Clearly, when you look this chart, you will definitely make a conclusion that the 5th wave might reach some of the upper Fibonacci levels, which we usually look for the expansion, and this goes up to 236, which is the 0.38 of projection that we usually do for the 5th wave target, which kind of aligns with this wave count that I'm trying to show you. So this cycle can last for a couple of years. As you can see, 2023-24, we might see still elevated oil prices in front of us. So that kind of goes with my picture looking net gas. I have said that energy component in many of these inflationary figures are a big part of it. Of course, energy influence everything, cost of food, cost of transport, many other things, many other industries. So if we are going to look oil technically to go higher, we might suppose that these inflationary pressures will stay for some time with us. And if we look the Henry Hub net gas, I have showed you this chart last time in some around here, looking for a move higher in the net gas, and I still think we have a little bit more upside from these lows, which was after this big consolidation. This relatively looks bullish. So we have from these lows, nice leading diagonal in a wave 1, down in 2, 5 waves up in a wave 3, which is still not finished. As you can see, some of the targets I have around 10, or we can overshoot a little bit. So definitely, I think this is the 5th wave of the intermediary 3rd wave on the upside. Then we're going to see some ease off, which I do expect to see also in dollar, in rates, and potentially we might continue further consolidating oil. And then we're going to continue further on the upside to actually fulfill the 5-wave structure, which is pretty much visible here if you look these subdivisions. So after a small pause for a couple of months, we're going to see most likely testing of these levels from 13 to 15 in net gas, which will also maintain the higher prices of the energy component in these inflation figures. So let's look also CRB index, Thomson Reuters, so commodities overall. I've looked for a little bit more upside, which is now actually unfolding. Also looking from the Elliott wave lens, we can clearly see we are going into a 5-wave manner on the upside. Then we can expect probably with a little bit more higher levels a pullback, which will also be seen in a net gas, maybe in oil temporarily. I do also see that pullback on corn, potentially even on soybean after we complete this wave structure. So all of these pictures that we look through different kind of a higher term developments are indicated that the inflationary pressures will pause relatively soon, maybe in a couple of weeks for these pullbacks. And we see that in a couple of commodities, as you can see, which might allow some of this relief in these inflationary figures. That might tip off a relatively wrong signal. People might think that we are done with that. But since we have a 5-wave structure, we have to be very careful what will develop here in this B wave, because easily, if we look all of this picture, this can be just a small pullback and we can continue on the upside. But we will talk about that when it comes. My conclusion, looking all of this commodity spectrum, is that we are coming to an end, at least of this small cycle, and we're going to see some pullback soon in this couple of commodities, and overall this commodity index, which I think it's relatively visible through the Elliott wave lens. Okay, so let's go to cryptos. I will just show you what the stock market is doing. Of course, let's look just Nasdaq, because Nasdaq is, as you can see from this pullback, is kind of moving a little bit higher. We still don't have 5 waves up from lows. Equality of these two legs was at 11,886. We didn't reach that yet. If markets tries to handle these rate hikes with a strong economy, with a little bit more resilience, maybe even a triangle can form here over a longer term consolidation. We don't know that yet. I mean, I'm not doing any conclusions on stocks. This still doesn't have, I would say, a clear direction on the downside. We did drop like 20% overall on this, but in general, 23.73%. But I cannot state that this is over. It might be, but I will definitely want to see more of the evidence. I will show you a DAX chart, which is the European index, which definitely shows a little bit of more, at least one more move, if not the full size recovery from this level. So if we go on a smaller time frame, we definitely see that indices will go higher, at least for some time. This looks like a small 5-wave reversal from here and a pullback, and we might I think we are doing here one down into a small flat and continuation on the upside, which definitely might move cryptos further out higher. I'm still not clear if this is done. When I look all of these patterns, we have an overlap, so this might be some type of an ABC pullback, and then we have another move lower. It is not clear yet, but we are going to see, of course, I think at least temporary, a little bit more upside-ish price movement here, looking what is going on. We have just a 3-wave pullback, and 5-wave advance, which usually portrays either a correction or a continuation. Of course, we will limit ourselves to correction, going a little bit higher, which I think we can also say for Nasdaq and the S&P. Okay, so if we switch to cryptos, of course, I have showed you this, which our founder Todd Gordon has rightly put, and he's always trying to, of course, being in the new role of having his wealth management fund, a lifetime dream. So he's also very present with, you can go to the New Age and wealth fund, and you can look his latest videos. It's on the Todd Gordon's channel. He tries to go into this from the stock perspective a little bit more deeper. But in general, this SMH correlation with cryptos are definitely one of the best that we can see. I have said many times that correlation Bitcoin and dollar is not so pure, and it's not so I will say reliable, especially for looking at a higher macro picture. It might agree sometimes from one reasons and might disagree sometimes from other reasons. That has been my case for the correlation between dollar and the cryptos for a long time. But definitely this SMH ETF, as you can see in orange, correlates much better with cryptos. And we have seen that also from yesterday move. SMH moved higher with the total crypto market cap moving a little bit higher. So just wanted to show you again this correlation, which functions, I think, pretty nicely. As we can look the current development, this is still a sideways consolidation, guys. Our case was from 2021, if you remember, that this was just the end of the wave 3, where the almost whole market was pretty bullish. We actually looked for a consolidation in one or another form in this total crypto market cap and in Bitcoin as well. So triangle is still on. Is this D wave finished and this is the actually fourth wave, E wave end? We cannot say that. I don't want to sound too optimistic. It might be the case with these triangles. You never know. We have a couple of things as guidelines where we looked time measurement between the wave 2 and wave 4. There is also a guideline of alternation. Wave 4 is relatively sideways, while the wave 2 was of a more directional nature. As you can see here, in any case, we are considering this to be a correction, and of course this to be a correction. So our task here for our members, which are in the crypto space at Trading Analysis, is to find out from where and when technically we might see some type of a break on the upside and start of this fifth wave, which will actually complete this cycle. 200 moving average on total crypto market cap is around 1 trillion. So any break of this 23.6 Fibonacci levels, which usually keep this triangle pretty nicely and neat on the sideways. So I do still, I'm still gonna stay with this triangle. I don't have much evidence to say to you, is it over? We might even get a D wave and still a little bit more prolonged E wave. Still done, these triangles are tricky things. But in general, I will wait for signs. I do see small 5 waves on a smaller time frame. So we are kind of thinking to put small longs on a Bitcoin. So for now, actually the picture stays the same. We are still trading sideways without the break of any major levels. I think total crypto market cap and Bitcoin are holding well in this risk-off environment. Moving lower, but not necessarily in a much more in an orderly manner, and not so hectic as cryptos might behave. So looking all of these components, we can say that we are still trapped in this sideways consolidation with a potential ending of this sideways consolidation soon, especially if this triangle is over. if we see 5 waves up from here, on the daily chart, the reversal probability, I will say, will become higher, and I will show you that on the Bitcoin chart. So let's switch to the Bitcoin chart and let's look what's going on there. I of course like to look larger time frames, and usually I show you the larger time frames on the Bitcoin. So I have talked a lot about these charts, guys, and the Elliott wave length that we usually use. So this is basically a best case scenario where we see a potential triangle done. We need to see a 5 waves up. When you have this breakout from the structures which are depicted as triangles, which means we have a completed 5 legs, all of them unfolded in manner of 3 waves. And yes, flats can be a part of a triangle if you are wondering about this. So this will be a wave A down, 3 waves up in B, 3 waves down in C. We had relatively A or WXY consolidation in D. 200 moving average, of course, is just above it. And then we might see a completion of an E wave. Of course, I'm not going to say, and as you can see, I still don't have evidence, and my probability scanner will go red, of course, if I see some type of the 5 wave development out of these previous consolidations. Of course, on this daily chart, we have a very important moving average, which is a 200 moving average, which I'm going to put here, so we can just have an orientation, because everybody looks that it's kind of also a little bit of self-fulfilled prophecy. So if we look this daily chart, as you can see, 200 moving average comes around 50K, very close. So I would like to see either 5 waves up to it or a little bit above it, and then a small pullback, and then this will increase probability actually that this triangle is over and that we are going higher towards this 90, 100, 120K, which are some of our first targets for this possibility. The worst case scenario, which I have told you last time, and I'm showing you that just in case I don't have multiple scenarios. I have only 2. I don't see any reason to have 10 scenarios. I've seen that much lately from this new Elliott wave newcomers. I mean, Elliott wave is not so easy. You need experience and much more cautious and details recognizing to actually be very careful and thoughtful what you are presenting to the public. So this scenario simply portrays a more visible support levels, which comes around 20 to 22K. I think this is visible from airplane or from even Tesla's car, which is floating around the universe somewhere. I mean, guys, come on, this is just like somebody pointed the finger to it. If you look this, how many things are actually there at this 38%. So we have weekly 200 moving average. We also have a 5 wave move low. Sorry, we have a base channel support. We have internal ABC equality levels. We have also sorry, just got some phone call. We have also internal level from the whole WXY structure. So all of that kind of composes a Fibonacci cluster here, which is almost like a heavenly hand is pointing to you. This is the biggest support you can find. Okay, so in that case, if something breaks down in stocks and we see continuation on the downside, this will be just a pullback. This pullback will not be big. So if you count this as a five-way move and you count this as a complex flat connected by the X wave, which usually acts as a connector, and then you have a ABC, which is a zigzag. This is what we call really complex corrections in the Elliott wave. They usually occur in the fourth wave, and in that case you will have a pullback, but this pullback will not be so high, up to 50K. So for the reference, you can use this chart actually, because the pullbacks should be a previous swing high is around 42 up to 44 and even 46, but we will definitely not go above. So if you want any reference to actually kind of a peak little bit, in this you will have some type of a complex or ABC pullback in three waves, and then a sharp reversal which will actually break this channel. As you can see, we stopped exactly that at that levels here. And then, of course, this will start to unfold very impulsively on the downside with lots of speed going below this 28-30K support levels, okay? So this is basically the only two scenarios I'm tracking. Depends on what will happen with the risk assets. For now, my favorite, my preferred one is still a triangle. I don't know if still it's done. That will also, this can be a little bit more prolonged, but anyhow, we will know that by looking the wave structure developing here in the next couple of weeks. But I will say the continuation in sideways consolidation, it's still my preferred count because the cryptos are holding well. And until we break some key levels, as I said every time, I will keep this triangle as an ongoing affair. So Ethereum, same thing. So we are looking at the potential triangle with a little bit more development. As you know, this is the finished triangle. We're going to see 5 waves up. So definitely 200 moving average, which was keeping these upsides pretty nicely. It will be broken a little bit if we have a 5-wave move development here. So you will see a sizable break on the upside, maybe a pullback towards this 200 moving average, where is also this upper line of this triangle, which usually acts as a support level, okay? And then you're going to see a continuation. So these details are necessary to recognize, so you can actually forward and structure your positioning on crypto. So I think definitely what will occur here will be very telling. Are we going to have some prolonged affair, just a pullback continuation down, or this will actually be a tip-off that Ethereum is going to go towards this 9 to 12K, which we have as a post-triangle trust target in this cycle, and we will complete this 5-way move on the upside. So as we look some other cryptos, Dogecoin looks suspicious. I have talked about that on the last stream. Let me just find my Doge chart. Yeah, and this is the one. We are peaking at these lows, at this substantially lower RSI levels, and then I do look this impulsively. So this is a wave 1 and 2, still intermediary wave 3 ongoing. And potentially this is a 5 waves up if you close smaller. In the case we break lower, I don't think it's going to be big. Also a very visible base channel, 200 moving average. So this is like a heavenly sign here of the support levels. But what I didn't mention on a Bitcoin, I will mention here on Doge. A market usually have a sense of ironic humor, and in most cases it doesn't go to this obvious point. Actually, it makes a joke and starts to move higher earlier. Okay, everybody expects maybe these levels, but market says, I'm not gonna do that, guys. I'm just gonna switch to immediate lows, makes a 5 waves up, and then a pullback, and then off we go to the next target. So I think this should be observed very carefully on Doge, especially as long as we trade above this 0.1099. This can be counted as a 5-wave move, and this as some type of a flattish pullback. So if we see this develops impulsively on the upside towards this previous swing high, which is the resistance levels. Next, Doge might be signal that we are actually completed the fourth wave and that after a pullback, we're going to continue higher. Yeah, so we see a couple of other pictures. We usually look Binance coin. We look also the MATIC. We still do see this to being in a bullish cycle. As you can see, Binance coin still consolidation. Maybe E wave is done. As you know, we are looking for this triangle a long time already for now. So 1 2 1 2. Intermediary wave 3 still to develop, so we are still in a bull cycle there. A sideways consolidation reaching 138.2. One thing also I think I need to mention on Doge, we have reached, I think, the last level time ratio, which we usually look, which is the 2618. And look what is interesting. When we look this relation between, this is just an intermediary wave, so you don't see anything before because I switched on daily. So time relation, we usually look between the wave 2 and 4, and one of the last resorts of this, we look at 2618, which is the pretty extended fourth wave. We have a 1618 here, equality here. So this is just a time ratio. And usually after 2618, we dismiss the possibility this is a fourth wave. What is interesting here, we stopped exactly there. It's amazing. So if this start proves to be another bull trend on the upside, it will be pretty incredible thing that we stopped and posted the last low exactly at this 2618.8 ratio in time spent in a wave 2 then in wave 4, just for some lovers of the Elliott wave time relation feature. MATIC is also sideways. We are also looking for higher, either from here in some type of a flattish 1 2 3 4 and 5, or a little bit lower, but I do not mind looking for also reversal from here. I do think that we are intermediary wave 3 and that we are going to see from this wave 4 up into a wave 5. So as you can see, lots of these cryptos and also on MATIC on weekly, we are pretty close on the RSI. So I think reversal is pretty near, or maybe even so. The last lows in the wave of the primary degree wave 2 and intermediary degree wave 2 here, as you can see, didn't actually cross this 40. And when you see the sideways consolidation and the RSI on these higher time frames falling, that's a sure sign that actually this asset class is very strong, okay? Because we are basically going nowhere, up and down, up and down. This is not the directional downside, and the RSI already show you on weekly readings on the downside, reaching almost the lowest level. So that's a sure sign we are very close to reversal. So that's why, looking these couple of things, I'm on a verge of concluding that potentially we might be very close, or this is maybe the lows that we waited to see. But this needs a little bit more confirmation. Okay. So yeah, so that's a kind of a small market overview from me. So Aave is still holding good. I have been very vocal on Aave for the last support. So also we have reached some of the levels potentially, which might be the second wave correction in this A triangle B down in C. We didn't exactly reach this 0.618 level, but we reached 786 retracement level, which we usually look as also last resort when we don't have a flat. We need to see 5 waves up in Aave, and then on a pullback, I will definitely potentially try to look for some longs with my members, either for a correction or a continuation, because I think Aave is in the fourth wave, WXY, exactly to the Fibonacci levels we looked, and then we are starting to creep higher or to go higher in 5 waves up, which I think it's potentially a reversal signature. So we will see. We will see. My famous sentence. Everybody's saying to me, "You say that always." No, I'm just a patient guy, which wants to see a little bit more confirmation than rather to be swiped out by this couple of crypto experts announcing reversal every week. Okay, so yeah, I see lots of interest from Zilliqa. I've been talking about Zilliqa many times, and I explained that. So we have seen a reversal from very close of our target on the downside for Zilliqa. So if you see the overall chart, I do see this as a fourth wave, and I do see this as a potential 5 waves up. So we need to see a little bit of a confirmational 5 waves up here, which we still don't. I'm still not saying that Zilliqa posted the low. This is a very nice Fibonacci cluster. 3 waves down. If we overlap this wave A, I will give a lower probability that this is a wave X, which means that the correction will prolong. I will say this is most likely a potential lows for the wave 3, for the wave 2, and we're going to see just another small pullback before we creep relatively pretty sizably higher. Okay, so all depends what will happen here, and as I said, always the last swing highs depends where they are located. Can pretty much easily tell you if this is of course a 5 wave reversal or a 3 wave reversal. Depends on the structure. Okay, so let's look. Let's look this. Just a second, guys. Give me just a minute. Mogu te zovem za minut, na nekom live-u sam. Sorry, guys. Just had to take that. Let me see AXC. Let me find that chart. Yeah, I've marked this as a fourth wave. As you know, we have reached a very nice lower levels. Of course, we do need to see a confirmation. Okay, on this one, let me just glare the picture. This chart is a little bit tricky because you might actually displace this either as a 5 wave move, and you're going to see a pullback, maybe a small another drop. I don't know if we can see 5 waves down here. Maybe 1, 2, 3, 4, and 5. Just a small push, one more to the downside. So this might represent A up in B, down in C for the fourth wave. You can also argue that this might be a wave 1 and 2, 3, 4, and 5, and this is a 5 wave move. But in any case, we're going to see a substantial, I think, at least some type of a reversal up to this 71. I think after this small retracement, or in the worst case scenario to 51. Okay, yeah, I need to see 5 waves up here, up to this 94, and then a small pullback. And these 5 waves, which actually it's going to tell me when I cannot read the chart so easily, when it starts to get tricky with some of the combinations, I need a larger confirmation. So definitely 5 waves up and a pullback will for me increase probability. Actually, this was a 4th wave low, and we're going to continue higher. Okay, let me see waves. Yeah, we looked waves for a potential pullback in 2. So if this is correct, and if this chart is correct, if this is not the 5th wave, I hope it's not. This should be a further development, although this was a 5 wave move. Surprisingly, I don't know if I looked this chart so recently. Let me just look the whole picture. This is a bad print. There is a 5 waves up and a pullback, and then you have another 5 waves up. Let me measure this if we see the equality there. You always need to look for that when you look for a bullish continuation. If you see, like we saw that in Aave, equality, you have to be careful what's going on there, okay? And we are not exactly at the equality, so I will not argue that the wave is done. If we subdivide the waves, we can see some type of wave 1 and 2, and then this looks like a wave 3, 4, 1, 2, up in 3. This looks like a wave 4, so I will not say, but typically this will be something like a flat, although it's look a little bit biggish, which means it's a kind of extended, so it can be a 335. And the 200 moving average is at 7.72. We are trading at 15, so worst case scenario maybe to here and then up. But the best case scenario, we are already starting 1, 2, up in 3, 4, and 5 with the higher prices. So we will stay on that. This still looks like, I think, on a smaller time frame, like a 3-way move. Okay, it's very sharp reversal, 5 ways down in A, B, and C. So on a smaller time frame, you need to see 5 waves up here to confirm at least ABC pullback. Okay, up to here. If not, it's going to continue further on the upside. So I will wait a little bit to see 5 waves up, a pullback, and then small stops for potential longs to here or even further on the upside. So okay, so let's look link and let's look one more, and that will conclude today's Crypto Lab. So let me just find, I have a link chart. Oh, sorry guys, I always forget that. I didn't look gold and silver. So I always do forget that. So please remind me. So gold, silver first, same thing. We have seen a sharp reversal. I've been talking about this a couple of months back. People started to get excited and bullish. I didn't see 5 waves up, so we had seen reversal in a wave X. So I think silver still has a little bit more to the downside. And also gold is still not clear. We have reached some of a very interesting level, which we looked for. Also Bennett and Terry, which are leading the stocks in trading analysis, also look the same level. So the question is, will gold find support here and trace out 5 waves up and a pullback and continue higher, or we're going to see just a small pullback and roll over to this secondary scenario, which actually portrays that this will be a 4th wave flat. So 3 waves down, 3 waves up, 5 waves down. We go to this 38% again, equality. But then you have to depict this wave 2 also as some type of a flattish, down in 1, up in down in A, up in B, down in C, and then you have a 5-wave sequence in a wave 3, 3 waves down, 3 waves up. I've been very vocal that gold was very suspicious to me when the war broke out, because it staged only $200 on the upside, which was really unconvincing for this type of an environment for me. Okay, so let me just find the link, and then I will let you go. Sometimes I talk too much, so I apologize. So let me just, yeah, link. I'm looking link to be bullish. I'm waiting for signs of reversal. I do think this is some type of a 4th wave ongoing. As you can see, 38% comes around 580. That will be the worst case scenario. 200 moving average on this weekly, and the RSI shows we might see potential lows very soon. We are exactly there at 200 moving average on link, as you can see here. So what do you need actually from there? You need to see a 5-wave move above this previous consolidation. So let me show you that, how that might look. And that will actually, as you can see, this is some type of a potentially even ending diagonal. It goes like with overlaps here, maybe over, maybe not. But why I should risk here when I have a relatively available upside, as you can see. So I'm not going to lose much if I wait 5 waves up and then a pullback, which usually occurs, and then I can actually have a small risk longer term potential here for the further upside. So usually I think this is something which is valuable to do. Okay. So thank you guys for the attention. I hope I do have requests for Forex. I don't know. I mean, Forex has been very quiet lately. Many people ask for some charts in Forex. It will get too long for this stream to go with the Forex as well. I do track it. I have been grown in the financial industry starting with Forex, with FX 20 years ago. So I see a couple of good setups there as well, possibly brewing. But I think we should keep focus on these cryptos, and as of course macro, we are just observing to get a picture for the cryptos. So we have to look this environment if we want to figure out what's going on, and if the environment actually will suit cryptos to go on the upside. So hit the like button, subscribe, help us that this content goes up in the list, and see you guys next week. If you want to check us out, go to tradinganalysis.com, crypto service. We have lots of features there, and we will glad if you will take a trial and check us out for our crypto service. So see you guys, stay well, and bye bye.